Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero, and we have a great episode for you this week. Tim Kotzman and Ed Juline from Bitcoin Treasuries join us to talk about their upcoming Bitcoin Treasuries Unconference in New York. That's next Wednesday, September 17th, with Michael Saylor and many others. I'll talk to Tim and Ed about what they're doing in the Bitcoin Treasury space, whether Treasury companies are sustainable, whether they pose any kind of systemic risk to the underlying asset. Also, just generally what trends are in DATs. It's a very interesting conversation. And we'll check with our good friend, Beimnet Abebe from Galaxy Trading to talk about markets. We're going to talk about inflation and employment numbers. We're also going to talk about a tense exchange that almost led to blows between U.S. Treasury Secretary Scott Bessent and FHFA Director Bill Pulte, reported by Politico. That's a fun conversation I know you won't want to miss. But before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into the show. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So we're seeing a little bit of a rally. I mean, I don't know. Bitcoin is still we're still in that range. 111.1. It's for weeks now, other stuff has been moving higher. It looks like stocks have been moving higher so far this week. We're actually recording this a day earlier than normal on September 9th, Tuesday. What are the big stories in the economy this week and in the markets, Bim?
Well, yeah, I mean, I think the labor market stuff is dominating kind of the attention of the market. You know, the BLS this morning released revisions that took down payrolls by a staggering 910,000 jobs, which indicates that the labor market has been weaker than what the official figures have stated for a while. And so it really starts to beg the question, like, is the Fed actually, super behind the curve now? And I think rate markets have reacted appropriately, pricing in, pretty aggressive cutting path over the course of the next, 6 to 9 months, essentially. But, given how much is priced in, I feel like the risks to fixed income are a little bit more balanced at this point in time, because I don't necessarily know if things are bad enough where you'd be going in increments of 50 bips. And so, for the next upcoming 3 meetings, at least, it seems like you'll definitely have, 3 solid cuts. Now, the question is, like, will you see the weakness in the labor market start to impact things in the real economy in terms of, growth, spending, asset prices, et cetera? And that, question is still kind of, TBD. I do think that, there is some element that, the market is different than the economy. But ultimately, I do subscribe to the thesis that, asset prices can't be too disjointed for too long relative to the real economy. And if, people are losing jobs or are afraid of losing jobs, and, the rate of inflation is above and beyond, like, wage gains, like, that should put a dampener on risk appetite at some point. And the other thing to keep in mind is, we're still in a period of tremendous Treasury issuance, and the reserve level in the market, while still being relatively ample, we are draining the market of net reserves every month as we continue to issue Treasury issuance. And you're at the point where RRP is close to zero. And every day I'm seeing a headline being like, oh, money market fund AUMs have just hit fresh highs. Well, that makes sense because we're still issuing more debt, and so somebody's got to buy them. And that's not kind of a sign of like slack or risk aversion in the market or dry powder. It's literally just a function of just how much treasuries we've issued. So paying close attention to the reserve backdrop, some of the economic statistics that have come out recently. You do have PPI and CPI this week, which should provide a better picture on kind of the inflation dynamics. But I don't think that they're even a surprise print to the upside is going to deter the Fed from cutting, given the weakness in the labor market data.
Got it. Yeah. And what are the expectations for CPI and PPI? Are we looking at a hot number, you think?
Yeah, I mean, I think expectations around like a 0.3 month on month for most of those figures. And I just don't know if the market really cares that much about these two data points at the moment. We just had another BLS revision prior to this one, that was pretty substantial. And the figures that came out for last non-farm payrolls, obviously, surprised to the downside as well. I think we added like 24,000 jobs, right, which is below the kind of natural rate that the economy needs to be at. And so like I don't think there's going to be too much weight placed on these tariffs, but at the same time, like the tariff impacts are actually being felt in the real world, right? Even on like super small things, like the getting rid of the de minimis exception in terms of importing. Like I've seen a ton of articles of people being like, holy shit, I just got my tariff bill from DHS or FedEx, and it's a lot higher than I expected. And so I think time will tell on the tariff stuff, but it will bite. I think most estimates are for prices to rise, on the magnitude of, let's say, 60 to 90% of what the tariff impact is going to be in terms of prices going up. Like if tariffs go up by $1, consumers should feel 60 to 90 cents of that. And so I don't think you've kind of gotten to that maturation point. But over time, as that happens, the question will be, is the Fed making a policy error by cutting rates when inflation is still really high, and time will tell. But I do think it's kind of notable. And Ken Griffin had an article this morning about Fed credibility. I think that the question or the premise of it, and I haven't read the article, was just like credibility takes a long time to build, but you can destroy it in an instant. And right now, given all the actions towards Powell, towards board member Cook, the new BLS person, there is a little bit of concern around data credibility, Fed integrity. And I do think that we are at risk of doing some permanent damage. Then some folks might be like, maybe we do need to do that damage, but I do think that those concerns are going to linger for a while during this administration, and I just don't know what the long run impact of that is going to be.
I got to ask you, Beimnet, about this story in Politico about Secretary Scott Bessent clashing at a White House, or not a White House dinner, a dinner attended by dozens of administration officials. I guess this was last Wednesday, and also chair of the Federal Home Loan Administration, or chair or head of it, Bill Pulte. And I'm just going to read this clip here from the I don't think you or I in particular have necessarily like a unique or hot take on this, but I thought this was maybe one of the most entertaining pieces of news I've seen in years involving a Treasury secretary. And I think our audience might like to hear.
Let's go out back.
Yeah, let's go out back. So at a long table, so amid a cocktail hour din, Bessent lashed out at Pulte in an expletive-laden diatribe. The Treasury Secretary had heard from several people that the FHFA director had been bad-mouthing him to Trump, a person close to him said. Why the fuck are you talking to the president about me? Fuck you, Bessent told Pulte. Quote, I'm going to punch you in your fucking face. The scene was described to the author by an eyewitness, and 4 other people confirmed that this is the author talking. Pulte was stunned, and the tense encounter prompted club owner and financier Omid Malik to intervene, according to 3 people, but Bessent wasn't having it. He sought to get him kicked out, talking about Pulte. Quote, it's either me or him, Bessent said to Malik. You tell me who's getting the F out of here, Or, he added, we could go outside. Pulte says, to do what? To talk? And Besson says, no, I'm gonna fucking beat your ass. What is going on here with the FHA? To be clear, like, I'm pretty much on Team Besson. I don't know what this dispute may or may not have been about, but this is pretty remarkable, especially in light of that prior report that he and Elon had gotten into like a shoving match in the White House. And then remember, Elon, sort of his last friendly appearance in the Oval, appeared to have like a black eye.
No, I mean, I think Bassett is a wolf in sheep's clothing. Like, he is, very calculated and, much more aggressive than his kind of image is. And yeah, and honestly, like, the way I think about it is, if Besant stepped down tomorrow, the market would have an awful reaction. If the Federal Home Loan Bank had stepped down tomorrow, nobody would care. And so, I'm generally on Team Besant because I don't want chaos in in markets. And yeah, I do think, like, the issue with kind of any administration and, the Fed, is just like, one's a political agency and one is meant to be apolitical. And, one part, one part of it, they come and go every 4 years, or like, in presidencies where they're trying to get elected, and you basically, after your first 100 days, you're already, trying to, win election the next time around. And so, versus, a Fed member, like, they're thinking about, like, how can I maintain the dollar as the natural reserve currency for everyone in the world in perpetuity forever, and that's the best thing I can do for the US. And that is thinking, thinking in decades, right? And so, and like, they don't react to like one data point, and they're not as swayed by the day-to-day headlines. And so, like, I just think there's always like a fundamental like misalignment of kind of incentives. And the other thing to think about, and it's like kind of staggering, right? Like, if you think about like the labor market data and how good the BLS is right now, even though people think they're bad, like, it's actually staggering, right? Like, I don't know, what's the size of the US labor market, 150 million, right? To be able to estimate something that's 150 million and to get it approximately within a million every time, and on monthly prints, like each monthly revision point, like the net gain or loss, let's say the average variance is like, you know like even a 2 standard deviation moves like 100,000, like, to get something that big, so precise, even with the toolkit that we had right now, is super impressive. Right. And just think about it. Like, I think about it, I got this analogy from one of the guys we talked to, but like, if somebody told me I had to exactly track how many people entered and exited the New York subway system on a given day, and I had to get it to the same level of precision that the Bureau of Labor Statistics had, like, I don't think that's possible. Like, I don't know if I'd be able to. And even one subway station, right? Like, to be like, okay, I'm at the 14th Street, station, and I got to make sure that I know the number of every single person that enters the subway, with all the wall crossers and all that stuff. Like, I don't know if, we're capable of getting it, down to that level of precision where you're 100% confident in that number. And so, like, I think people really, underestimate how hard it is to do the BLS's job, no matter like what methods you're using. And so, I genuinely think there's too much shitting on the BLS happening right now. But again, that's not to say there isn't room for improvement. I just worry that, in terms of credibility, like, we know the types of people that this administration generally puts up. Like, they tend to be, very loyal to the administration, and that's not to say that there's anything wrong with that. But, when your loyalty is more to the administration than like the data integrity, like, that will naturally, generate some questions, and particularly around credibility. And again, credibility is something you can destroy in a day, but it takes, a really long time to get.
Well, that was an artful elaboration on the Scott Bassett question, my friend, and also very true on independence and BLS. Look, I think we're all just, if someone's taking a right hook, I think it's pretty clear we'd like to see it be best and not, on the delivering end, not on the receiving
I
end.
would pay to see that. I would pay pay-per-view prices. Like, I would love to see it.
My man. All right. Beimnet Abebe from Galaxy Trading, as always. Thank you so much.
Thanks for having me.
Let's go now to our guests, Tim Kotzman and Ed Juline from Bitcoin Treasuries Advisory. Gentlemen, thank you so much for coming on Galaxy Brains.
Thanks for having us.
Thank you, Alex.
Well, it's a very timely topic. There are dozens of Bitcoin Treasury companies, dozens. I think we were tracking more than 50 worldwide. It's one of the most important narratives in all markets, not just in Bitcoin markets. And probably certainly emanating originally from strategy, which particularly about a year ago, last fall, was by far the biggest story in all markets. I mean, I could not go down the street here in New York without being asked about what Michael Saylor was doing. Then there was Metaplanet, I think was pretty much the second one. But just in the last 4 to 5 months, we've had this explosion. Maybe we just start right there. Like how would you characterize the moment we're in as it relates to Bitcoin Treasury companies today?
Yeah, so it was only a year ago, May, at the Strategy Bitcoin for Corporations conference in Vegas, that I just, on a side, I was talking to Dylan LeClaire, and I'm like, hey, where are you going after this? He's like, I'm going to Japan. What for? I've just never been there, but he couldn't tell me what he was really up to. And then at the Strategy Bitcoin for Corporations conference, this last one, Fong gets on stage and says, by the end of the year, there'll be 700. And we kind of rolled our eyes and said, come on, really? And then within an hour, we all looked at each other and said, he's probably right. There's going to be 700 public companies, and multiply that times 4 for private companies. And now Tim and I are getting inbound literally every day on X and LinkedIn and email from more and more companies saying, we're doing this. And each and every one of them has a different twist, a different strategy. But it is blowing up, and nobody knows what success really means. But we're here to facilitate that ecosystem.
It's what is the demand? Why is this happening? I mean, put it that way. Why is this happening? I was at that conference over a year ago in Vegas, the Bitcoin for Corporations conference, Ed. And Michael Saylor was talking about, existing companies that have, some cash flow, but they're effectively zombies, adding some Bitcoin to the portfolio, to the balance sheet, smaller companies doing it. That's a lot different than running the strategy, right? Where you're, levering up the balance sheet, either borrowing money or issuing stock and using it to buy Bitcoin and then repeating, or many of them acquiring, shelf companies to do it with. What is the driver of this moment? Or also another sort of a corollary to that question, Michael Saylor started buying Bitcoin in summer 2020. Why did it take until spring 2025 for people to really start emulating his strategy in earnest?
Yeah, I think that's an open question as far as why did it take half a decade, really, for anyone to really get up to speed. And then when you look at these lists of the companies, you mentioned 50 or 60 or dozens, there's 180 some, 100 and whatever the number is, companies on a list. But to your point, there's probably only a few dozen that are the leveraged Bitcoin equities, right, or whatever you want to call them.
Right, we're on that list, and we're not running that playbook.
Right. So, I mean, certainly strategy is the leader, but I think it'll be interesting, like, how do you differentiate when you go from just a few, call it strategy, Metaplanet, Semler came out around a similar time, to now just dozens of companies. And I guess there's two different sides to the coin. One is it's so overwhelming to just keep track of the companies, let alone try to analyze them if you want to allocate or just right from that investor or analyst or trader mindset. And then the other side of it is there's only 12 or 24 or 36. There's not that many, but I think you have people on both sides of the aisle saying, this is crazy, there's so many of them. But when you zoom out, how many are really technically in that leveraged playbook at this point.
Sorry, if you start with the question of, what is a Bitcoin treasury company, and that first qualifier is that they have Bitcoin on their balance sheet, well, that opens it up to tons of companies, right? So do they have to be an all-in, the full hodl, or is Tesla really a Bitcoin treasury company? Is GameStop really a Bitcoin treasury company? Or are they a T-bill treasury company with some Bitcoin? And so the qualifying metrics of what is a Bitcoin treasury company is just so wide that when we, even when I was at Strategy, we tried to come up with like, okay, what are all the things we're going to measure these on? And when the list got to 30 different measurements, we kind of threw in the towel and said, now let's let someone else do this.
Yeah, I think you're right. Like, is Figma a Bitcoin treasury company, right? They have Bitcoin on the balance sheet. So is that the approach that you guys are taking to with Bitcoin Treasuries Advisory? Are you trying to advise that broad category of anyone that might want or have some Bitcoin on their balance sheet, or are you focused on the treasury strategy?
Yeah, can we let you know after lunch?
Yeah, I think it's so early that it's just a conversation, and we're still trying to get our arms around what are all of the needs, right? We don't want to do something someone else is already doing. We want to add value. So let's just say it's a very small early industry, and whatever Ed wants to add.
Yeah, it's a work in progress. What we're trying to do for now is, Tim's podcast is just fantastic. He brings people on and listens so well, and people are able to tell their stories. Great. We're hearing from all different corners of this treasury industry. With our events, we want to get the investors, the service providers, the treasury companies out there to get together and talk about things and figure out what this thing is. And then on the advisory side, Tim and I are we're in this for the money, but at the same time, we're trying to protect our stack. And so we don't want to see another Mashinsky, another Sam Bankman-Fried. And if we can be part of, helping people to make the right decisions, then that's kind of the way we're giving back to the Bitcoin community.
You talked about the metrics at Strategy, and one of the things that I love about Strategy is their dashboard. They have this great dashboard and Metaplanet, I think, has done it as well. There aren't many others that do. And one of the interesting questions is actually calculating the MNAV of these firms. You can track their buys as they announce them, but tracking their share issuance is much more difficult. In fact, most of these firms are not required to actually disclose it outside of maybe a quarterly filing process and cadence. I believe Strategy does, right, every time. So it's actually possibly an accurate MNAV, as insofar as they disclose it. But many don't, and that actually makes it very difficult to understand what is actually happening. Do you think they'll maybe be, or would you advise companies to be, more transparent with that, as much, more transparent than regulation requires?
I would. Over to you, Ed.
Radu with Big Strategy Tracker, strategy-tracker.com. He's created dashboards for, I think, 9 different treasury companies now, doing a fantastic job there. Over at bitcointreasuries.net, they've got all these metrics as best they can gather information. Transparency, I think, is, it can't be something that's required, but obviously the ones who are being more transparent are getting more investor attention. Just that's the way the Bitcoin world works. The MNAV measurement by itself is kind of fading into the background now. One of the sessions at our conference on the 17th in New York will be really addressing this. What does MNAV really measure? It seems like every week, guys like Jesse Myers and Jeff Walton and Ben Workman are coming out with new metrics on what are we really measuring here. Something that's really piqued my attention is what Jeff Walton is talking about, of also measuring NVIDIA and Tesla and Microsoft on a Bitcoin standard, and saying what is their Bitcoin per share based on their treasury holdings, and show how it's actually depreciating. Mm-hmm. So there's tons of ways to do this. The more transparent it seems to be, the better. But it's a choice company by company.
Yeah, Jeff Walton from Strive Asset Management, punter Jeff, right?
Yeah,
he's done a lot of good work too, and so is Jesse and Ben. I agree with that, Ed. I think let's talk about your event on the 17th in New York at the vaunted Pub Key, the third place for Bitcoin in New York. What are you guys doing there?
Yeah, so we have our conference on the day during the 17th, which will be at Levant. It'll be an unconference, small stage, front of the room, very much like a political town hall, where we'll have thought leaders talk for 5 minutes each and take mics out into the audience. I think we think people are getting a little bit of panel and presentation fatigue, so we wanted to do something a little different. The night before, on the 16th, there will be a gathering at PubKey, not our official event, but it'll be packed. And then on the night of the 17th, any ticket holder for our conference will be able to get into PubKey, where there might be a certain strategy executive chairman showing up to bless PubKey with his presence, but we don't have that confirmed yet. But no, both of those events on the 16th and 17th will just be a fantastic way for people in the Bitcoin community, the Treasury space, to jam in there and drink some beers. The best burger in the world.
It's true. The PubKey Smash Burger, very good. I know it well. Is the conference for investors, potential investors in Treasury companies, or is it more focused on the companies themselves, circulating best practices, things like that?
Yeah, I think Ed kind of broke it down as best as we can, which is we anticipate probably 70% or so investors, some smaller percentage Treasury companies, and then a smaller percentage service providers. So I think those are the kind of the three buckets that we've at least identified that'll be there, and all kind of working together.
Yeah, we're currently at about 24 Treasury companies from all over the world. Andrew Webley coming over from England, Alexander Lizette from France, Arcadia from Mexico. So there'll be a lot of Treasury companies in person trying to tell their story, as well as the service providers trying to shill them their products, and the investors trying to make a decision about where to put their money.
Yeah, it is a growing and complex landscape, and I think you guys have made the point well that not everyone is following the same strategy. Thank you, Michael, for naming your company strategy. It makes it so easy to talk about. Right? For example, I think about a company like Nakamoto, which is, I assume, although I don't think they've said this or it's not in their docs that I'm aware of, but assume that BTC Inc. may get folded into that at one point, and then you've got this big events and media business alongside of the Bitcoin acquisition strategy. Very different from, say, what MicroStrategy is doing, or what Strive is doing. How does this represent some brilliant new foray in financial engineering and finance that people haven't done before? How diverse do we think the strategies might get? Aside from I'm a company, I've got 1-2% of Bitcoin on my balance sheet. Is it going to get? Are we at the beginning or the middle or the end of the explosion in innovation here?
Yeah, I feel like we're at the beginning, and I feel like especially with social media amplifying and exaggerating even everything, right? We're up, we're down, it's over, we're back. Yeah. It's all of those things. It's like when MicroStrategy started this half a decade ago, a lot of negativity due to ignorance, and it's still out there. But now it's kind of like, oh yeah, I mean, at least it's more so accepted. And then you had Metaplanet, and I don't know that there was a lot of negativity around it, but it was just like, it's just this arbitrage in Japan, and they're probably going to change the laws. It's like, right, every excuse you could think of to be kind of negative. And then, Nakamoto, right, we're going to invest in other Bitcoin treasury companies. Everyone, including guys that I'm very good friends with, were like, oh, that's going to blow up this whole thing. I mean, very negative, and no one knows the future. But I think so whether it's 6 weeks or 6 months from now, we'd be like, oh yeah, well that makes a lot of sense. It's just like this education curve, this negativity curve that then you're like, oh, well, yeah, no, now it's obvious. Now Bitcoin's obvious. Now strategy's obvious. And to your point about the media company potentially being a part of that, I mean, I think it's very obvious all over the place that there's just a lack of visible Bitcoiners that can really communicate that message. So to have a whole media platform and conferences to support that messaging seems like a great idea.
When it came to me was after the first quarter earnings call, where Saylor did, I think, 2 hours on explaining the back end, the financial engineering, the incredibly creative financial engineering that they do over there. And it felt like 2 hours of like just TradFi creative financial engineering, and it's spreadsheets. And I've seen these spreadsheets, right? They're just, okay, if this, then that, if this, then that, all predicated upon this Bitcoin hurdle rate, of saying as long as Bitcoin goes up 7% per year on average over a 5-year period, all the rest of it works, and the people that I think are struggling with this are the ones that haven't accepted that Bitcoin will go up 7% per year over a 5-year period. And then once you're convicted on that, the rest is just execution. It's just there's never been an asset that we knew was going to go up 7% per year on average over 5 years. Now that we know that, my God, just program all that financial engineering on the background, offer it to the fixed income markets, and you're off to the races.
The securitization of Bitcoin does, give me shades of mortgage-backed securities or other types of, there was a great piece that was written about the investment companies of the 1920s. I'm no financial historian by any standard, but, what are the risks in your mind to these companies? And then I'm also interested talking a bit about the impact, both positive and possibly negative, on the Bitcoin markets generally.
Yeah, I guess I'll go first.
You take that one. I'm not touching that.
I was on a call yesterday, right? Technically a holiday in the U.S. Yeah. And the guy's like, "Oh, did you see XYZ companies down another 10% today?" And it just got me thinking. What first got my attention several years ago about strategy was I looked at my Bitcoin stack, and I was used to a certain amount of volatility skewed to the upside. Yep. And I'm like, it's at least during this time frame, the volatility is going down. What can I do to kind of keep on that path? And the leveraged Bitcoin equity seemed like an interesting idea and worth considering. And so I got to think, and maybe it's not the right answer, that if people are not used to, right, if they haven't been through a cycle or two, they're just not used to that volatility, especially not in a public equity. Like, that's not normal.
Right.
So maybe it's as simple as that, as far as just being, if it's going to be a leveraged Bitcoin equity, it's 2x Bitcoin volatility. Well, just maybe study what that means and be ready for it, or don't do it. So just like familiarity or education or something.
Yeah, I don't think we know what the risks are yet. That's a little scary, right? Because if one of these Bitcoin Treasury companies loses their keys, or insider threat, or they get predatory pricing on their financial instrument, or yes, all of that can happen, but that's all TradFi games on top of Bitcoin. The underlying Bitcoin doesn't exist, as we well know. So what TradFi games and tricks you put on top of TradFi, which strategy, in my opinion, has put that risk at as close to zero as you could possibly come, that they're not going to have any problems. But some of these ones at the bottom of the list, if they don't have an operating business that has positive cash flow, if they've got predatory pricing, if they're keeping their Bitcoin with, Bob's Bitcoin wallet, those are risks, and we're just going to kind of uncover them as we come. I think the first Bitcoin Treasury company that screws the pooch and goes under, it'll affect all of them in a very, very severe way. But it has nothing to do with Bitcoin. It has to do with the TradFi games on top of it.
Yeah, too much leverage. Or if you start like a Dogecoin treasury company, that might need to add some Bitcoin to that one.
Pretty sure. I don't know if Doge, I can't recall if Doge specifically has been done, but there are many altcoin treasury strategy companies. I guess when I say risk to Bitcoin, I mean more the Bitcoin market. I think one of the things people highlight is the risk, in particular, if the MNAV goes below 1. Now, to be clear, they don't have to do anything. MNAV is not a binding metric. There's no requirement that a company trade at a premium to its holdings, right? But I think people are concerned that if either just because demand dries up for the common equity, or some mistake occurs, or over leveraging or whatever, and MNAV goes below 1, then these companies will be tempted to sell their Bitcoin holdings to buy back their shares to bring it up. And then if this happened, you can imagine, one company can control for that, but everyone can be acting in their own best interest and with pretty good risk parameters. But if the market goes a certain direction and everyone does it simultaneously, it can create a giant overhang and it's the same flywheel in reverse, right? That has some of these trading in positive. And I think that's what people are worried about, that it can create systemic risk for the Bitcoin market.
Yeah, I think negative MNAV will lead to M&A. I haven't thought of like a cool Balaji way to say that yet, but I think you'll see M&A or hostile takeover maybe, but yeah, over leveraged I think the thing that some may be missing is that the common stock's going to get hammered, but unless you have short-term debt, you don't have to sell the Bitcoin. So that's where I think maybe the M&A will come in, or some sort of everybody's be up in arms, I can't believe this is happening. It's at a negative MNAV, but it doesn't necessarily mean
that's right
that they have to sell the Bitcoin. So I just don't see how it's a negative in that lane to the Bitcoin market. I think it's only a positive. And if you take all of the companies and add up all the Bitcoin, if they're not in the top 10, let's say, it's such a negligible amount right now. Right.
True.
You guys sell more Bitcoin in this office than all those companies have combined. So
that's true.
I don't see that as a big risk.
All these treasury companies have a investor relations challenge in front of them that most of them don't have people on their team to deal with that, right? Strategy does it brilliantly through Sailor traveling the world and being the spokesman for strategy, and Metaplanet's done a fine job of it. Others are trying to figure out how they're going to do that, how they're going to tell their story. I think one fantastic way to tell your story is to sponsor the Bitcoin Treasuries Unconference, New York City on September 17th.
Is that coming up September 17th?
That's coming up.
Here in New York City?
This is after September 17th when you're listening to it. Wow, did you miss out?
Yeah.
And there were laser beams, smoke machines.
It's true. It either is going to be great or will be great. No, I think you'll be. I think it is. I hope it is still coming up when this podcast airs. I think that's a fair point, by the way, and even when it comes to the debt, the vast majority of debt that exists is Strategy's debt. Most of these are shelf companies certainly not able to tap the convert markets the way Michael Saylor is. And I should also point out that by our tracking, his debt is quite small relative to Strategy's size. So
extremely small.
Yeah, so it's maybe I haven't looked that recently, but call it 15% of which is really not that much. It's nominally quite a large amount because Strategy's worth, $100 billion or so, 70 to I don't know what the current value is. It's over 70 billion of Bitcoin, and is trading around a 1 to 1.4, 1.5 MNAV. So it's a huge company. So the nominal amount of debt is large, but it's manageable. It's also termed out relatively far in the future. So I agree. There is nothing forcing Treasury Strategy and company to sell their Bitcoin unless they have debt, they have to pay, and most don't have it. So we're early. In that sense, it feels early.
Yeah.
Also, the vast majority of Bitcoin owned by these companies as a cohort is owned by MicroStrategy and not by the others yet, at least.
Yeah.
Yeah, they built an amazing toolbox too, because they've got cash flow coming in from their underlying business. So they've got Converse, they got ATM, they've got Strike, Strive, Stride, Stretch. And so the same way that us as personal individuals, we've all been in that point where it's like, crap, I need a few extra $1,000s, and you go tap your kid's college account, or you go into the shed and you say, I'm going to sell this bike, or whatever you have to do to end up getting back on top of your cash flow. Well, Strategy's got this massive toolkit that just on every Monday, they probably say, okay, which one are we doing this week? And spreadsheets telling them which one to do based on market conditions. A lot of these other ones, if they just have the ATM and they don't have cash flow from the underlying business, or they don't have converts or whatever, and they don't have the toolbox, and they could get in trouble. So you're going to see the convert companies and the ones that do the preferreds, and you're going to see 20 more tools in the next year that people like Jeff Walton and Ben and those guys are going to come up with and Strategy themselves are going to come up with to say, here's another way to react.
Yeah, I think a big part of the conversation that you'll see over the next quarter, 2 quarters, year is what strategy is laid out with the preferreds. Let's say they retire all the converts and they can get, they've stated, right, 30 to 50% leverage when it's just preferreds. What are those numbers like? I mean, then you can start buying billions or tens of billions of dollars worth of Bitcoin every name your time period.
Yeah, it's something for sure. I mean, what Michael and the team there, Fong and Sharish and whoever else is there. It's not that many people, right? I mean, how many people are actually working on this part of it at Strategy?
Maybe 10 people.
Yeah, it's incredible. Like what they've done. I mean, like I said, it really wasn't a joke. I was giving a guest lecture at Columbia Business School last fall, really like in October, maybe like late October, maybe a week before the election or so. And Strategy's common stock was hyperbolic, and it was literally the biggest story on Wall Street, and I think one that will be studied for decades. Nobody has done what Michael Saylor has done, and when you look at the value he's brought to just to long-term shareholders of MSTR, it's astonishing. Company that was, in fact, go and look at the MicroStrategy, the MSTR, just stock price chart all time. It's one of the wildest charts you'll ever see. So, yeah, truly something. The toolkit is, I mean, he's inventing stuff, most of us, the vast majority of us, and the vast majority of Wall Street had never even contemplated.
Well, what do you think, Alex? I mean, why hasn't another Fortune 100, Fortune 500 company jumped on this?
Well, I mean, I would say it. I would ask it a specific way, Ed, about why did Apple's board, or was it Microsoft's board that Michael Saylor talked to? Microsoft's board, just like categorically refused to buy any Bitcoin, right?
Yeah, I know the answer to that. It's there's a name for it, but there's companies out there that tell the Microsoft board what to do, and it's driven by, to not throw out a name, but Vanguard tells them what to do.
Yeah.
And so there's a whole thing here, which is like that. It wasn't the shareholders voting; it was these companies that advise boards how to vote, and that's driven by Vanguard and Morgan Stanley and whatever. And so,
they are, by the way, a huge holdout. Vanguard, in particular, one of the largest shareholders in the world. They I think still don't even allow their retail brokerage clients to buy the ETFs, is my understanding, on their platform. Which is
and it's because their traditional investors are still thinking that it's a Ponzi, still thinking that it's a high risk, it's toxic. And so even one of the other financial services companies that's heavily into Bitcoin told me this. They said, we can't associate ourselves too much with Bitcoin because our traditional investors will think that we've turned into a high risk partner.
Yep.
So if a Coca-Cola or a Delta Airlines, and they say, hey, we want to put 500 million, there's that risk that their stock actually goes down. And then what executive that's making millions of dollars per year is really going to look at that career risk and say, yeah, I want to do this? The Strategy thing was unique in that you had Saylor with 51% voting shares. His ice cube was melting, and he said, I'm going to take this risk. And in 22, it looked like he made the wrong decision, and then in the long run, he was okay. But I am really struggling to figure out how these Fortune 100, Fortune 500 companies are going to, have the fortitude to even buy one Bitcoin on their balance sheet and not have it risk their careers and their shareholder perception.
It's so interesting that you're saying career risk still exists there for the public company CEO and treasurer and CFO, because from a registered investment advisor standpoint, we largely see that the career risk has been removed, mostly thanks to the ETFs themselves, right? And that owning it in a traditional portfolio, even a small percentage, we and everyone else have done the math on this, but historically speaking, going from 0 to 1% has the single biggest benefit to your portfolio. I mean, you could do math. Sure, there were times when having 100% would be best, or having 10%, but just having any is, I think, widely regarded now in the investment advisor community as beneficial to the Sharpe and Sortino ratios of any portfolio. So the career risk, I think, because the ETFs exist for an RIA, have been largely removed, and you see pensions and endowments and other types of vehicles buying the ETFs and getting Bitcoin exposure that way. But it sounds like from your point, Ed, that the career risk is different for a publicly traded company than for
Yeah, I mean, that's the life of the CEO is how many years, and he's just looking at how do I survive this and get my bonus and my parachute. You should have Rick Edelman on your show. He is doing God's work in this space, spending his own money to get out there to RIAs. And he made a really good post on X the other day where he basically said to the Bitcoiners, stop telling everybody to go all in. It's counterproductive. Just tell them to go 5%. Let's tone this down a little bit and get everybody on the 5% watermark. And then the maxis lose their mind and say, oh, it's all or nothing. And it's like, no. So yeah, Rick Edelman's doing God's work on this topic.
Yeah, and I think Vanguard will allow their clients to own 3x levered VIX ETFs and other totally absurd stuff, but apparently Bitcoin's a bridge too far. Sorry, I'm just going to take a little shot there at Vanguard too. But one thing you mentioned earlier, Tim, that I wanted to bring up is you were saying that one of the big risks to investors in owning these is just volatility, right? And by definition, they're trying to bring more volatility to Bitcoin or in their stock and Michael Saylor's talked about this a lot. He's called volatility is vitality, right? He's sort of monetizing and weaponizing his stock's volatility, which is another fascinating part of what strategy is doing. But part of what I have been noticing, Bitcoin's volatility has absolutely been declining, as you pointed out, for years. It's really not very high now. I think you're on a 30 handle in realized volatility, which is quite low. And part of me wonders if the investor interest here, especially among some longer term Bitcoiners, is just the need for that volatility. It's been years. You wanted to own a volatile asset, yes, mostly volatile to the upside, but Bitcoin's not really that volatile anymore. And so maybe part of the appeal and thus the growing demand for and resulting explosion in these treasury companies is a desire for the volatility that Bitcoin used to be known for, but really, frankly, hasn't been around for that long. What do you think about that?
Yeah, I think that's spot on. I think what's swirling around my head right now is that these Bitcoin treasury companies, the ones that are, they have a great communicator, they're executing the strategy, they're going to be seen by TradFi as the next iteration of Bitcoin. Oh, now it's Bitcoin treasuries, and that's where the volatility is. But it's still going to be seen, to all of our points, as volatile/risky because it's so volatile. And it'll just be part of how it plays out. But yeah, I think, it's kind of wild to think that Bitcoin itself could become more of a lower vol, more conservative play versus a Bitcoin treasury company.
Yeah, Hal Finney wrote, famed cryptographer Hal Finney, just a couple weeks after Bitcoin launched, that there was a very good reason for Bitcoin banks to emerge. I'm sure you guys have read that famous post. He really was talking about traditional banks, as in commercial banks that issue debt to fund projects that are sort of the mechanism whereby fiat currency gets into circulation. I think he was describing a little bit more of sort of a free banking model. But he said that there was a very good reason for banks to own Bitcoin and then issue their own paper on top of it, and that you could end up in sort of a free banking model along the lines of what George Selgin has written at lengths about, where banks are capitalized with Bitcoin, but they issue currency that is itself collateralized by that Bitcoin to some degree, and some are more collateralized and some are less collateralized, and so they trade at premiums or discounts, but that the underlying is a gold-like instrument that is Bitcoin. He literally wrote this 6 weeks after Bitcoin launched. I think that this is sort of the instantiation of that idea, these Bitcoin treasury companies. They are collateralized by Bitcoin. They are issuing paper. In this case, instead of currency, it's stocks of various types, securities, with varying levels of premia or discount. So in some ways, it does feel like Hal Finney, not the creator of Bitcoin, I don't think, but the receiver of the first transaction ever, and having this view, 16 years ago, does it feel like this is I don't know, I don't want to call it end game because, Bitcoin continues to surprise and come up with new things. So I don't mean that this is the end, but this feels almost like a fulfillment of a multi-decade long idea.
Yeah, the last session at our conference will be Bitcoin Treasury companies, the rise of a new class of financial institution, and that'll be Michael Saylor, Brian Dixon, and Mark Moss. And so that's exactly the topic they're going to talk to. I started the title of that one with Bitcoin Treasury companies, the future central banks, and I was told to reel it in a little bit. So it is going to be the last topic of our conference, and it's clearly the direction we're going. Exactly what you're talking about.
Yeah, it's wild to look back on those writings and just the trying to imagine the thought process and the vision that they had to to just say those things. It's just wild. Really cool.
Well, there's a lot more going on. I encourage people to check out the conference, and it's on September 17th in New York.
September 17th, Levon, if you go to Luma and search for Bitcoin Treasuries Unconference.
There you go. Check it out. Check it out on Luma. Search for Bitcoin Treasury Unconference. And Ed Juline and Tim Kotzman, thank you so much for coming on Galaxy Brains.
Thanks, Alex.
Thank you.
That's it for this week's episode of Galaxy Brains. Thank you to our guests, Tim Kotzman and Ed Juline from Bitcoin Treasuries, and our good friend Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXYResearch. See you next week.